Joining us now is Jeff Currie, Senior Advisor at Carlyle, Co-Chairman at Abaxx Markets. It's great to have you back, Jeff. Thank you for joining us. So how much farther down can oil prices go? Can we get to levels that we were at before the war?
We're very close to the levels we were at before the war. You know, you were in the low 70s, right before it began. I think the market is overshooting to the downside right now for, I think, a host of different reasons. One is you had many parties, starting last week, destocking. They knew this deal was going to come, so they assume they're going to be buying at lower prices. So basically, you've had a buyer strike. And actually, in some cases, it started 2 to 3 weeks ago. So the idea is they wait it out, get their oil, their shipments at lower prices, and destock as much as they possibly can. You're also seeing the destocking on the financial side. So both physical and financial destocking. But in terms of thinking about what that means a month from now, you have a lot of pent-up demand that's going to come back into the market and, push this market back up to higher levels. Just looking at the underlying cost structure of the industry and where we are today to attract investment. Because remember, we haven't seen it pop, an increase in drilling and investment activity. Estimates now put it as high as 80, 85 to get this capital to flow. So, where we are today, we clearly, I would argue, overshot to the downside. And by the way, the companies, like, the big integrated oils, they've given up everything all the way back to January. So I think there's a lot of value to be found in the space right now.
Got it. So the price is undershot, but the companies have also? You would buy them?
I mean, they basically, like, look at ExxonMobil. It's given up everything. It went into the war, I think, at 153, and it's trading like 136 right now. Does anybody on this program really think Exxon's worth less today than it was before the war started? Because it's going to have to, increase supplies around the world. The refining margins are near record levels right now. And we're talking much higher price expectations today than what we were thinking about, before the war started. So I don't see any reason why these companies, have given up all of the gains they've made this year.
Jeff, you mentioned the destocking, obviously using as much storage as was out there. It seems like it was more than was estimated a few months ago. But every step of the way, the price response to the upside was probably less extreme than a lot of folks in the physical markets thought it would or should be. And I wonder, you say there's a lot of pent-up demand, and that might be because of, you got to rebuild inventories and get refinery runs. But what else is the market's message here? Is it saying that there's been permanent demand destruction, that there's been acceleration in renewables, that this was the last real oil shock we're going to get? I mean, I know that's kind of famous last words, but I'm curious as to how you read the overall market response to this crisis.
Well, when you say, the market, it surprised to the upside at the very beginning. Physical markets went in that 150, 200 range. And I think the one lesson I've learned in all of this is the trading liquidity is really critical in determining the overall price level. And what started to happen, particularly after the ceasefire, is the back and forth in deal on, deal off. That created so much uncertainty that we saw a collapse in VAR, value at risk, in terms of overall investors in the space. It collapsed, open interest collapsed. It was just too difficult to hold positions, long or short, in this market. And as a result, we've seen a lot of people exit. And I think that lack of liquidity is just creating a suction across the overall market. And even this morning, right now, I mean, there's questions. The IRGC just came out and says no further shipments through the strait until Israel gets out of Lebanon. So if we're already in the back and forth, and the ink is hours old. And so I think it's that policy uncertainty that makes it incredibly difficult to hold positions in this space.